versus bulls in just a couple of minutes. Just wanted to welcome you all, and I hope you guys had a great Thanksgiving. And it's it's going to be the start of a new week. Where has this November is gone? We'll be starting the week of December, and we'll talk about the news that will impact the markets, as well as my technical outlook for this week. Before we get started, I'd like to also invite you to check out www.mymarketheatmap.com for our Black Friday sale. It's 75% off. Use the coupon HEATMAP75 and go over to the checkout to get access. Also, check out Lead Chairs University if you want to get to a free masterclass. Okay, guys, let's go ahead and get started. Okay, we're going to go to my favorite tool. The My Market Heat Map was the arrangement of currency pairs by percentage change. If you want to reach it, mymarketheatmap.com. Before I get started, and in the market, myself and my students at the Elite Traders University, we use My Market Heat Map. So go ahead and check that out. And just go to pricing. You can use the Heat Map 75 coupon, and we'll give you a reduced price. Okay, let's go ahead and we log in, and it'll take us to the account page. There's a whole bunch of there's tools here: equity heat maps, commodity heat maps, currency heat maps, trader tools, charts, quotes, economic calendar, financial news stream, market hours, technical analysis, sentiment, currency correlations, Forex liquidity, tutorials and videos on how to trade, plus a number of bonuses worth over $9,500, including a 30-day free Forex signals, and also free access to our Forex Foundations course, which is perfect for those of you who are brand new to trading or need to learn more, add to your learning. This is a great source of knowledge compiled by me with your subscription to the My Market Heat Map. Okay, let's go to our tools. This is like My Market Heat Map is like a Swiss Army knife, and so let's go to economic calendar. And then what I do is I adjust it just the high impact news items, and you might get a pop up there you want to get rid of it. High, and then we can see that we're going to have starting this week, the major news items we're going to look at. We're going to have some PMI, or purchasing manager index, purchasing the Eurozone, the UK, where the manufacturing services PMI, marketing services PMI out of the UK and out of Germany. This will impact the euro. So put the euro on your radar, as well as the British pound. For those are on Tuesday, November 23rd. The releases of that data will come out at 3:30. We are looking at next week. Hey, there you go. Get on the right next. We're looking at next week. Okay. Yeah, okay. Gross GDP. Sorry about that, guys. Tuesday, November 30th, GDP from Canada, as well as GDP from Australia. Look for that Canadian data to come out at 8:30 a.m. Eastern Time. The previous number is 0.4%, looking for a forecast of increase to 0.7%. And if that comes in at forecast or better, we might see the Canadian dollar rally. Let's look at, and then later on in the evening, at around 6:30 p.m., we're going to have the Australian GDP quarter on quarter. Previous number is 0.7. Look for a contraction to 0.5%, and we'll look for that. If that number comes in as expected, we might see continuing weakness in the Australian dollar. Okay, moving right along. Wow, we're in December already. December 1st, 24 days to Christmas, right? That's on a Wednesday. We're going to see PMIs coming out of Germany, the UK, and the United States. We have the market PMIs for Germany. Previous number was 57.6. No forecasts given. And the UK, 58.2 was the previous. Look for a contraction to 57.7. And if that does come in like that, we could see a weaker pound. Usually when we have higher PMIs, higher than expected, that's usually good for the currency, and we usually see a rally in the currency. The U.S. We have USD or USA, ISM manufacturing PMI. Previous number is 60.8. Look for an increase of 61.0. And actually, when we see a United States flag, we want to trade the euro because the euro is considered the anti-dollar. Okay, you can trade dollar Swiss, you can trade dollar CAD. Those can be a little tricky, but the best way to trade U.S. news, if I found, and that I teach in my course, is to actually use the euro, which is kind of counterintuitive. So let's look at Friday, December 3rd. Big Friday, because it is the first Friday of each month. Now, on the first Friday of each month, we always expect non-farm payroll, NFP, one of the biggest economic announcements ever watched by traders all around the world. Is the number of jobs that the U.S. economy adds for the previous month. So we'll be looking at backward looking. So we'll be looking at November, seeing how those numbers came in. And we're actually looking for previous number was 531,000 jobs created. And that is a lot of jobs. I will see if we can beat that or meet that. If it comes in less than that, then we could see some action, especially volatility, especially in the euro. And we've been seeing some really strange movements in the currencies. Like you'll see the dollar and the Aussie dollar both rally, or the dollar and the euro actually rally. So there's a lot of as the Fed starts to unwind the taper, where they're going to slow down or their bond buying or actually unwind it, is creating all kinds of really weird phenomenon in the market that we haven't seen, such as big drops in the market and things like that. So they blame it on COVID, but the Fed's already unwinding, which means their operations of buying assets is coming to a close, and so we're seeing some of the think of stimulus as like a drug given to an addict, and now you're gonna withdraw. You're not gonna give them that drug anymore. Not gonna give them heroin anymore. Well, they're gonna go through withdrawal symptoms, right? I don't know that personally, but so I've heard and so I've studied that when you deprive someone of drugs that they've been receiving for a long time, they might have shakes, or they might vomit, or they might go in convulsions because they no longer have that drug. Their body is dependent on it. And right now, the market's been so dependent on the Fed, the United States government, pumping liquidity into the market, that as it starts to pull away, we're seeing these sharp moves in the market, whether it's rallies in the dollar or rallies in the euro like we had, or just different things, a little different phenomenon, just different shakes and jerks in the market. Okay, we'll also have payroll numbers coming out of Canada as well. Previous numbers 31,200, but no forecast is given. Okay, so these are the currencies we want to be watching. We want to be looking at. And there is a Bank of Japan speech on Monday, and the Japanese yen has been rallying. And usually, when the stock market starts to drop, the yen becomes a safe haven play, as traders are unwinding the carry trades when they were borrowing in cheap yen and buying riskier assets. Now they're also unwinding now that they've got paid those yen loans back. So the carry trade goes backwards, where as the stock market drops, the yen actually goes up. Okay, we did see a big end of day rally in the euro and a drop in the dollar, which is part of the weirdness that's going on as we go through what we call a taper tantrum. So let's go ahead and move on to the technicals and put these things on your calendar. It's very important. I even tell my students all the time that before you even pull the trigger on a trade, before you pull up a chart, the first chart you should look at is the economic calendar. The economic calendar. It's the first thing on the checklist that you should look at, other than this obvious news. I mean, like checking the Wall Street Journal or checking CNN or Bloomberg just for headlines. Something like you wake up in the morning and there's a new COVID variant and everybody's panicking. That's all the reason not to get long into riskier assets, right? And basically now your game plan should change, because now you have really important news that's shifting the market. All right, it doesn't take that long to look at your. And if you want my free checklist, you can email me at greg@EliteTradersU. I'll send you a copy of my traders checklist. Look at the 30 things I check before I enter a trade. And after I've checked all the headlines and the indices, and then I'm going to check what's going on in the economic calendar. Okay. All right, let's get into the charts, which many of you are like, hey, come on, Greg, let's get to the charts. Okay. All right. So over here, we're looking at TradingView, and this is the U.S. dollar index, and this is a basket of currency pairs versus the U.S. dollar. Most of them are European. That's why it's kind of good to always look at the euro when you're looking at dollar. And you can see that this has been in an uptrend since May. Higher highs and higher lows. We have a green demand trend line. Prices moving up. We can even add a 20-period moving average, an exponential moving average, to kind of see what's going on as far as trend. And usually I have something like that on there, so I'll put that 20 on there, and we'll maybe make it like yellow so it stands out, and make it a little bold so it will be visible. Okay. All right. So we can see that we've been moving pretty much up, right? An upward trend channel. We can even make that into a channel. Lower end of the channel, higher end of the channel. So at the top of the channel, usually we get from the bottom of the channel to the top, and we saw this big rejection candle. Also, you want to look at some back data. You want to go even back to the beginning of the year. We had a high roughly around the 103 area, 102.97 or so, and we can take a fib, and we're going to play Drake backwards from the top to the bottom, and now we're here. That's when you go broke, right? And you can't sell any more records. Okay, and you can see that we had prices that dropped. The dollar dropped, found some support in the 89 to 90 area. Started to rally through the 50% retracement as resistance 96.19. Broke through and came back down. Did a Shamu, broke up above it and dropped down below it. Big giant candle. I look for some type of a retrace. Usually we'll have, after a big violent move from here to here, we usually have, and this is a 3-candle reversal candlestick pattern called the evening star. It consists of a bullish candle, a small indecision doji, like a cross or a spinning top, and a big giant candle there. So this is a 3-candle evening star pattern, but it's such a violent, forceful candle. Some bears probably got some profits, and they start taking profits, and so sometimes we'll see a bounce from these lows, and maybe we have some type of bounce. We might see, we can take a fib on that from here to here, and we'll get some type of a bounce, maybe a bounce to that line, a small bounce, and then maybe a continual drop, right? And we may go ahead and drop back here. Okay. Now this is going to be very good. People say, well, Greg, spend a lot of time on the dollar, but think about it. If, especially here in the U.S., if you're going to buy the euro, sell your dollars to buy the euro. If you want to buy Bitcoin, you're trading your dollars to buy Bitcoin. If you want a gallon of milk, you're going to trade USD for MLK. Not Martin Luther King, but milk, right? I just made that up, though. But anytime you trade your dollars for something else, that is a pair, right? If I buy gas, then I got to use dollars, GAS/USD, right? I'm short dollars and long gas. So when we see a weakness in the dollar, we'll usually see other assets go up. Aussie will go up, Euro will go up, and we'll see maybe Bitcoin go up, because now it's in reverse. Now we're selling dollars, and what are we doing? We're taking our dollars and we're buying something else with it. So when you see the dollar drop, look what other stuff that may have gone up, right? So now we're going to go to the euro. Okay. Now, in fact, we can we're on the daily, we can scale this down to a 4-hour chart, and you can see the buying has already started here, right on the close. So we get maybe our dead cat bounce, right? So look for some type of a bounce. But let's look at the euro, and we can see that the euro had its own dead cat bounce. It bounced down to low about to 1.118, and now it came up really strong, but it's probably coming up to some type of a Fibonacci resistance, and 23% retracement sometimes doesn't hold, but we could probably see a move up into the maybe 113.80. And since we had this really big drop, almost like a gap, if this area does not hold, price could come down here and keep going, right? But if it breaks 113.80, you see closes above 113.80, look for the next fib to come into play, right? It's like in an elevator, it's like Jumpman Jr. Remember that old game from the 8-bit Atari days, jumping from one level to the other. So if it breaks through or break out, and now we could come into this 50% retracement, 114.41, right? But there's lots of resistance up in that area, so that we could see that hold. 618 typical, that's the typical retracement. So we could see, I see people online saying, they're going to fade this move. And like, good luck. This thing is really a pretty strong 4-hour uptrend. And unless we get a solid break below this steep trend line, which is possible, we have long wicks, but sometimes the market will throw some long wicks in there just to sucker you into shorting it. Oh, look, it's going to be an evening star. I'm going to short it. And then, psych, and then it keeps going higher. So I would watch it. If it does close below like 112, like 112.90, and we have a fully developed 3-candle pattern, evening star here, then shorts will be, pretty cool, and taking them back down to the old low. But I think that looks too easy, and usually the market, if it's too obvious and too easy, the market continues to run. Okay, that's just my two pips worth. I would be wrong on this if we break, like say, below 112.90, and we break 113.29, then the next fib at 113.79 comes into play on the euro. So I just wouldn't be too short happy on this. I know, it looks pretty like this one here. Oh yeah, that was pretty good, but sometimes the market doesn't give you 2 shots at it in a row that easily like that. Especially because we are beyond. This was collapsing around the 20-period moving average. This one has cleared above the 20 moving average, and we could go higher. So I would just be careful. Let's go ahead. The next currency that I'm only going to cover like the currencies that we were actually that have news. Okay, in this type of environment, if you want to be in the market fast, you want to be like where there's an announcement around the news. And I know in the past, you've probably seen some of my old videos, I probably avoided trading the news. But when you get in a really low volatility environment where the market just moves sideways, you need a catalyst that's going to spark this wet wood and cause it to flame up. And that's going to be when there is some type of announcement, non-farm payroll, PMI, or retail sales, some type of economic announcement usually around, they happen around 8:30 a.m. Eastern time or 10 o'clock Eastern time. That's for the U.S. news cycle. There's 2 times, 8:30 a.m. Eastern time. Go into like world clock converter or something to convert it to your local time zone to figure that out. I speak in Eastern time zone, even though I don't live in Eastern time zone. I live in Central, but I use Eastern because New York is kind of like the financial center, and I don't live in London, so I'm not going to use London time. Okay, so we have so look at that now around 3:30. They seem to be changing in the UK. It used to be like 2 o'clock a.m. Eastern time, and then they switched it to like 3:30 a.m. Eastern time. So between 2 and 4, the European news releases come out. Okay. That way, if you're not, and then around, you get the Asia, Australia ones like around between 7 and 9 p.m. So those would be like the 3 different time zones that you can look for. That way you're not sitting in front of the market for the entire time. You can just sit there for an hour or so and play the volatility and get out. And that way you can spend more time with your family and your kids. You don't make your wife into a Forex widow or make your husband into a Forex widower. And you're not wasting time, because if you're making 20 pips and maybe you're only trading 1K lots, you can make more money probably at a fast food restaurant than you can trading. Okay, so you want to make sure the time in front of your computer is very, very profitable, that you're look at it as an hourly wage, and then do the math. Okay, and if you do the math, and if you're making like $3 and $4 an hour sitting in your computer, or you're negative because you haven't made any money yet, then you have 2 choices. You want to either get professional help, that's where I come in, or there are a lot of jobs out there paying $15, $16 an hour, $20 an hour, that are much better than trading. Okay, that's just my honest advice to you. Okay, because if you're just DIYing it, hoping that one day you're going to figure this out, it ain't going to happen. Okay, so moving right on. Okay, we got let's look at pound. Pound, something similar. Let me remove the drawings here. Move drawings. Okay. And this is a really nice setup here, right? I'm going to go to the daily. Okay. Now, the daily, I'm going to go all the way out, right? We have this long wick. Now, two things. Fibonacci is going to give you a pretty good area. We get an established low right here, established low, giving you like a lesson here too. An established high, right? So you have a high, and actually, see, this is like a double top, so that's like a warning sign there, or a reversal chart pattern, like double top drop, and then actually is a 4, 1, 2, 3, 4 taps of the 4240, and that's it. 2018, price is a memory. What happened in the past happened in the future. When people, we have to put disclaimers out. Past performance is no indication of future results. Well, that's the past, and this is the future, and it did happen. Okay. But again, disclaimers are past performance is no indication of future results. But we have to say that anyway, right? But let you know that price does have a memory. So here is, we broke through this 23% retracement. It held for several weeks and then broke. And once it broke below, then we look for this to be tested, 131.59. So bulls versus bears, I'm bearish on this. I think we get down to this area, and from there we can see a bounce. Right, and we might see a rally because we saw a drop, so we might rally to the moving average before we make our drop down to this area. We do have a trend channel that is lower highs and lower lows working its way down, and it's a supply, so make it red. Overhead supply and red. Okay. Actually, it's kind of like, this would be a demand trend line, really, right? Because it should be green, right? It's kind of weird to do that. It goes up, and then demand, and we're shorting, right? So we can see we're at the bottom of the channel. We may rally, but eventually we'll work our way down to this 50% retracement or 30% retracement. If this level does not hold, then the next is a 50% retracement at 128.17. And the way the dollar is acting, we might not get that far down. Okay. The Canadian dollar is a dollar CAD. We can look at, we have some Canadian news coming out, and they call it the loonie, and we can see that we've hit this area, this 127.95 area. We've pushed through it. I mean, actually, we can actually draw it here, on the wicks, or we can do it on the close. If we did on the closes, then we got 2 taps there, and now we're tapping it again, right? And we have a demand trend line where price is making higher lows. This low is higher than this low. I'll draw circles around the lows to let you know what I'm talking about. What's he talking about? Okay. This low here is higher than this one, right? So this is an uptrend. However, it's also a downtrend, okay? And when we have an uptrend and a downtrend meet, it forms a triangle. Can you say triangle? Triangle, right? Now, in this triangle, it looks like we got a breakout, right? And we, even on that swing high, we do have a breakout. Will it continue? We have the moving average turning up, price above the moving average. And it really depends on what's going on with the US dollar. We break above this area here, then we can see some moves. We can take our fib from the high to the low, and we can say 38% retracement. 130.23 would be a target. When we break that, we can see the 133.25 area coming into play. And basically we're above the 20-period moving average. We are making higher highs and higher lows here. An intermediate uptrend makes it bullish for now. And if we got below that line, like 125.92, then all bets are off. We would be long CAD, short dollar. Now, Canadian dollar is highly correlated to petroleum, oil, and gas, right? And so if we actually just take a detour and take a look at the U.S. oil, which is a CFD, we can see that the dollar dropped and then oil dropped at the same time, which is pretty interesting. Usually when the dollar goes down, oil, they're priced in a downward move in oil. Downward move in oil, downward move in the dollar. Usually we have an upward move in the dollar, which makes, and since oil is priced in dollars, it usually makes oil weaker. So it's very interesting to see a weak oil, a drop in oil like that. And the reason why is we had the drop. We had Biden talk about releasing the strategic oil reserve, not too far from me here in Oklahoma here, where they have the strategic oil reserve. And so that's one of the things. But when we see dips like that, usually we see snapbacks, and we have this. You can connect these, and we can see we broke through that one. So we might see a snapback in the oil, especially if OPEC decides to reduce the production of oil, because Biden made a deal with the Saudi Arabia and some of the oil producers to produce more oil, probably instead of supporting our local fracking industry, which actually made us oil independent for the first time in our history. I don't understand. I'm not going to be political, but it makes sense to use your own oil than use somebody else's oil, I think. Okay, wouldn't you agree? Okay, moving right along, we have Australian data coming out, and the Australian dollar has been taken on the chin really bad. I mean, it's been dropping. Let me go ahead and remove the drawings. And here's our daily chart. And similar, see the Canadian, the Australian dollar, New Zealand dollar, they're like the time travelers. Stuff that happens there seems to happen to us a little later. And we can see that we had a rally in the Australian dollar earlier, back in into October, and then it hit the 50% retracement, ABC, and then boom, we had a drop right back to the old low, right? And I think from here, we have this very interesting double bottom formation. Be interesting if this area holds 71.13. If that holds, and we get a close above it, above this line, then we could see maybe a push back up to 73.10, right? But that's about 200 pips, right? However, if we cut through that through like a knife through butter, and there's a lot of old resistance back here, or old support that price has to work through. There may be a bunch of buy orders sitting in here. Or hopefully a double bottom holds and we get a bounce higher. So that's the, and we can draw a trend line across the top of this downward price action, right? And I'll make that red because that's our supply line. Because every time price rallies, the overhead supply causes prices to fall. And so now if we see a break of that line, maybe like 71.60 would be something to use to get long for a bounce, dead cat bounce, maybe back up. Maybe it won't get back to 73.10, but if it got halfway there, that's 72.34. That's 121 pips possible. And after that, the downward trend could continue. Got enough momentum to break on through to the other side, break on through, right? Could do that, right? So I would be constructively bullish on this, but for like a really like pip and run, get in, get out, and then turn around and get short. So really, all in all, I'm still bearish, but I would take a low risk short of a stop just below that line, and if it broke that line, I would just get out and then get short, right? So it would just be one of my riskier counter trend trades, but I wouldn't risk that much on it. I mean, I would have to snap and take off for me to really get into it. We go to a 4-hour chart, and you can see there's not any bullish momentum. Like people at the close they're not like thinking like, hey, Greg might be right, let's get long. No, they stayed short right into the close, right? But we'll see. Okay. So that was Aussie dollar, New Zealand dollar. And let's see what else we had with the pound dollar. And remember, we got non-farm payroll. Now, non-farm payroll comes out really good. What's going on, too, we've got this COVID, this new Omicron variant that's out there that's hanging around. It's a variant of interest. It hasn't reached, there's no cases here in the U.S. There have been some flight restrictions and things like that. But we saw that the stock market just really collapsed. And I think it just found a reason to sell off. I think it just really, we need a reason to sell. Oh, a COVID variant. That's right. Let's sell, right? So this could be an opportunity, a dead cat bounce. I mean, we're totally seasonally, we usually, stock market usually rallies, which means Aussie dollar, New Zealand dollar, pound dollar, euro dollar. Usually all rally around this time going into Christmas. It's supposed to be like a smooth ride. And then some people are saying that the smooth ride happened early, like October 4th. We got our move from October 4th, and then now we're in this take profit era. We've got some IRS tax things here in the U.S. So maybe people are taking a loss now so they can put it on their taxes. Hey, I took a big loss in 2021. I took a loss, right? Then January, they come back in and buy everything, and it shoots back up. They get a write-off for January, for 2021 taxes. They got a write-off, and then they can go ahead and make money in 2022 and make a ton of money, and their taxes are fine until the new year. They can roll over any losses into the next year. So I'm not a tax professional, but it just seems like this could be some type of way of beating the hike in taxes by taking losses now in a more favorable environment. All right, so that is okay. Somebody wanted to take a look at Bitcoin. If you have something you want to see, I'm going to check the chat box here in the here in our group. This is if you don't have a home, a Forex home where you can find information. You want to come over to the Forex Cash Machine group. Forex Cash Machine is our group, and that's where I'm live streaming right now, right? No, I'm wearing another shirt. Okay. So I'm live streaming here, I believe. But you can come over here. You can go to, in fact, you can come over to theforexcashmachine.com to actually sign up. That's TheForex cashmachine.com and sign up to join my free Forex Facebook group. Try to say that 5 times fast. Free Forex Facebook group. Free Forex Facebook group. Okay. Anyway. And also remember, we're offering a special 50% on tuition for the Elite Traders University. You can come to the Free Forex or Free Forex Facebook group at the Forex Cash Machine and find out more. And we'd love to have you aboard. And as you start 2022, you want to have, things are going to get more difficult, more perilous. I have 25 years in the industry. I've worked for some of the largest banks and Forex broker dealers in the world, and I'm uniquely qualified to be able to help you reach your financial goals in trading. Okay. So with that, I want to say my goodbyes. Remember to come over to my Trader's Best Friend, my market heat map. You can use it to scan the markets, to find out. There's also an app on Google Play and the App Store as well. And so I wish you all a great week, a great trading week ahead, and happy pipping. Cheers. Bye-bye.